I'm Anna, the top woman trader in the world, and I assist inexperienced traders in generating profits. This video will discuss how to read stock market charts. See you after the intro. Good morning, traders! Before we dive into this ocean of knowledge on stock chart reading, I have something important to tell you. If you want to see how I put all these great theories we're about to discuss into practice, don't forget to check out my courses. There you'll see how I trade on stock indices and commodities. It's like sitting next to me as I try to tame these financial bulls and bears, but without the risk of me stealing your coffee. Now get ready, because we are about to start a journey into the fantastic world of stock market charts. I know, you're already thinking, how boring, but I promise, I'll try to make everything more fun than a TV series marathon. So why should we be interested in stock market charts? Well, think of them as a kind of superpower in the world of trading. It's like having X-ray glasses, but instead of seeing through walls, you see through the chaos of the market. Cool, right? Okay, let's start with the basics. What the heck are these charts? Well, think of them as a market secret story. They'll tell the story of how the price of a stock, a cryptocurrency, or anything else you're trying to make money on has behaved. There are three main types of charts you need to know. The first is the bar chart. Imagine you have to tell a friend about your day, but you're too lazy to use words, so you just use dashes. For example, take Apple. A bar might tell you, today Apple opened $150, went up to $155, went down to $148, but in the end closed at $152. All this in a single dash. It's like a summary of the prices day at a glance. Then there is a candlestick chart. This is my favorite, guys. It's like the bar chart but with a Hollywood star makeover. The candles are colored, usually green if the price goes up and red if the price goes down. Let's take Tesla for example. A green candle might tell you Tesla opened at $700 and closed at $720, but during the day it went up to $730 and down to $695. All this in a single candle is like an action movie compressed into 1 second. Finally, we have the line chart. This is for the lazy. Just kidding. Actually, it's great for getting a general idea of what's happening without getting lost in the details. For example, if you look at a line chart of Amazon over the last 5 years, you might see a line steadily rising from $300 to $3,000. You won't even see every single day fluctuations, but you will immediately understand that Amazon has grown a lot over time. Okay, now that we know the types of charts, what the heck should we look at? Well, there are some key things. First of all, the price direction. It's like looking at whether the road is going uphill or downhill. If you see a lot of green, it means it's going up. For example, when Apple announced the iPhone 12, you would have seen a lot of green candles, one after the other. If you see a lot of red, well, guess what? It's going down. Think about what happened to airline stocks when the pandemic broke out. Red everywhere. Then there is the magnitude of the movement. Think of candles at thermometers. The longer they are, the higher the market fever is. If you see a candle as long as a lamppost, it means something big has happened. For example, when Elon Musk tweeted that Tesla would accept Bitcoin, the Bitcoin chart made a huge green candle. Then, when he said he had changed his mind, boom. Giant red candle. And let's not forget about volume. This is like measuring how crowded a store is during a sale. The more volume there is, the more people are buying or selling like crazy. Think about Facebook's EPO. The volume that day was insane. Everyone wanted a piece of that pie. Now let's talk a bit about trends. Trends are like the seasons of the market, but unlike real seasons, they don't have a fixed calendar. They can last days, weeks, months, or even years. We have the bullish trend which in jargon is called a bull market. It's like spring. Everything grows, blooms, the sun shines, it seems like it can never end. Think about the tech market in recent years. Companies like Apple, Amazon, and Google seem to do nothing but go up. Then there is the bearish trend, or bear market. This is more like winter. It's cold, it's dark, everything's sad and depressing. Remember, 2008 financial crisis? That was a classical bear market. Stocks were going down every day. It seems like there was no end. And finally, there is a sideways trend, which is like when the weather can't decide whether to be hot or cold and you don't know where to go, out in stores or with a jacket. Think about the oil price in certain periods. It goes up and down in a narrow range for months without deciding to take a clear direction. How do we figure out what the heck trend we are in? Well, there are several tricks. You can draw trend lines, which is a bit like when you're used to connect the dots to make a drawing as a child. For example, if you take the Netflix chart of the last few years and connect all the lowest points, you'll see a nice rising line. This is a bullish trend line. Or you can use moving average, which I like when you used to calculate the average of your grades at school to understand if you were doing well or poorly. For example, many traders look at 200-day moving average. If the price is above this line, it's considered that we are in a bullish trend. If it's below, we might be in a bearish trend. Then there are supports and resistances. Think of them at the floor and ceiling of a room. Support is the floor. The price struggles to go below that level. For example, Bitcoin for a long time had supported around $30,000. Every time it went down there, it bounced back. Resistance is the ceiling. The price struggles to rise above that level. Amazon, for example, struggled for months to overcome $3,500 before succeeding. And then there are patterns of price models. These are like consolidations in the traded sky. For example, there is the head and shoulders pattern, which has nothing to do with shampoo, but tells you that maybe the price is about to take a nice slide downwards. Imagine seeing the GameStop chart during the famous short squeeze. It rose vertigously, then went down a bit, then rose even higher and finally crashed. That was a classic head and shoulders pattern. Or there is the double top, which is like when you try to jump over a wall. You try once, you cannot do it, you try again, still nothing, and in the end you decide it's too high and go back. Apple, for example, made a nice double top around $180 in 2022 before falling significantly. There are also continuation patterns like triangles of legs. This is like when you take a break during a marathon. For example, look at the Tesla chart. It often makes nice, exciting triangles before making another leap upwards. Guys, I know I filled your head with stuff. It feels like you're eating a whole encyclopedia, right? But don't panic. Reading charts is like learning to drive. At first you think, why did I do this? But then it becomes as natural as eating a pizza. Remember, the charts are not a magical crystal ball. They won't tell you, hey, buy this stock and you will be rich tomorrow. They are more like a map. They help you understand what you are and where you might go, but it's up to you to decide which road to take. And please, don't think you will become experts overnight. It takes time, practice, and yes, even a few flying ups. But hey, who hasn't fallen off a bike while learning to ride? One last thing. Always remember to have fun while learning. Trading can be as exciting as a poker game, but always remember to play responsibly. I wouldn't want to hear that you sold your home coach to buy shares in the company that markets has forecast, just because you saw a chart that looked promising. I hope now charts seem a little less like an alien language and a bit more like a fun game. Happy trading to all, and may the charts always be green. And if they're red, well, remember, the Santa Claus also dresses in red and he always brings nice gifts. In trading, sometimes the best gifts are the lessons we learn from our mistakes. So never get discouraged and keep studying those charts as if your life depended on it. Because in a sense, your portfolio certainly does depend on it. And if you really want to understand how I handle these situations in daily practice, my courses are just what you need. I'll explain exactly how to recognize signals on the chart of stock indices and commodities, how to set up proper money management, and how to protect your capital. You'll get in-depth look at how I apply these strategies in the real world, with practical examples and real trades. Think about where could you be in a year if you start learning the right strategies today. I look forward to seeing you in my courses, where you learn all these techniques in detail and much more. It's time to move from theory to practice. Remember, the market is out there full of opportunities. It's up to you to see them with wisdom, a bit of courage, and why not, with a little help from me. See you on the other side, budding traders.